10-year note Treasury yields continued what started on Tuesday. That's pushing higher. Recall we gapped open earlier in the week, settling Friday at about 272, opening up on Monday evening at above 280, and today we got as high as 295. So a big move for Treasury yields in a short amount of time. About 20 basis points since Friday settled. Now, a lot of that has to do with the data we're getting. We're getting some stronger and some mixed economic data. We got the Beige Book today, which suggested that despite economic expansion, some of those districts are seeing slower growth. Obviously, that's not something you want to see at the beginning of a tightening cycle from the Fed's perspective. Likewise, we continue to hear from Fed speakers talking about normalizing rates and getting them higher. And we're starting to see the Fed balance sheet reduction begin as of today. So a lot of things moving against the 10-year note Treasury price-wise, which is why we're seeing yields propped up quite a bit over the last two sessions. Now, 10-year note yields haven't been up as high as 3% since mid-May, but very close to that as we end today's session. Now, what does this all mean for volatility? Well, if you check out that CMOL index over at cmegroup.com, you'll notice that volatility does remain very directional with yields. And as following the May FOMC, we saw yields moving down pretty steadily. We saw volatility coming down as well. Yesterday, we saw yields jump up higher. We saw volatility jump up higher. Today, we saw the yields move higher again, but we saw volatility really holding steady. We didn't see that increase in volatility that we saw yesterday or that we're getting used to when yields move up. Lastly, what do we have for the rest of the week? Well, we have the ADP number coming out on Thursday. Typically, that comes out on Wednesday, but because of the holiday, it's being delayed a day. Expecting up 300,000 in the private job sector. Likewise, we'll get the claims number, which is another look at the jobs market, anticipating that to come in north of 200,000 as it has over the last several weeks. That's not something the Fed wants to have. They want to continue to watch that very closely. Likewise, we'll continue to get Fed speakers talking about the Fed balance sheet reduction plan, talking about rates. And then lastly, all eyes will be on Friday's non-farm payroll number. We're anticipating about 325,000 new jobs. That's a decline from last month. So midweek, 10-year note yields seeing a push higher after Monday night and Tuesday's big push higher, getting very close to 3%, a level they haven't been at since mid-June.